Good evening, good people. It's Saturday, December 16th. My name is Dave Coker, and this is Talking About Finance. Hello, men and women, all who want one thing, to build wealth, to become financially independent, who realize the single best way to achieve this goal isn't buying indexes, isn't buying stocks like the Magnificent Seven, it isn't following the crowd, but to buy assets that pay you to hold them. This is different, this is key, this is effective, and it is exactly how I achieved financial independence in 2002. Guys, if I can do it, so can you. And now that that's settled, let's talk about finance. The S&P 500 finished up about 2.49% on the week. All 11 sectors finished in the green, with real estate and materials leading the advance, up over 5% and 3% respectively. Coming in last on the week, but still finishing up, were utilities and communication services, well above 0.5%, closing in on 1%. Not a bad run for either sector. So we can count the number of trading days left in 2023 and things look good. But 2024? Well. Bills got to be paid. And I think this market has a big bill to settle. The VIX traded down on the week to 12.28. It started the week at 12.35. Somebody set a 40-year low. I'm going to look it up after I get off this call. The 10-year note closed the week at 3.91%, down 0.3% on the week and flat year to date. Oil closed the week at 71.66, up about 0.6% on the week and down about 10.7% year to date. So yesterday was Friday, and you know the routine. Yep, Bitcoin. And I bought. Of course I bought. I buy every week. I buy and I never sell because I'm boring. So let's find out what me and my buddies, some 50 or so finance professionals, talked about last week on a private Telegram channel. And if you don't know us, we are Global Wall Street. And between Telegram and our personal networks on LinkedIn and WhatsApp, we know everyone, absolutely everybody in global finance. And this week we're reporting from the City of London. We're reporting from Wall Street. We're in Shanghai. We're reporting from Hong Kong. And we have a new member who's reporting from Melbourne. We have people absolutely everywhere that matters. So let's go. 7 slides for 7 days. You're money freaks? We are money freaks? Guys, we rule, and don't forget it. We're going to beat those markets. That's the way it works. And this is an interesting one. We started talking about this in the group because there's people, graduate applicants are being interviewed for the internships that start up in the summer. And one of them asked, how can you leave investment banking? And the guy joked and said, oh, you can die. Right? And then somebody else found this. I don't know what came first, chicken or the egg. Who knows? Doesn't really matter. No. You don't have to be that extreme to leave investment banking. I certainly didn't. I just retired. I left banking. A bunch of my friends have done the same. And other people are thinking about it, maybe doing it. But no, you really don't have to worry about that. And we're also getting lots of queries. I got a couple about experience as an analyst. And again, I tell people very very honestly, investment banking is not a job, it's a lifestyle. So when you take an investment banking job, it's a whole way of life. And that's what my experience was like when I first started working in banking. And in fact, this one resonated with me because when I was in banking, now I don't smoke, but I was as big as that guy. Yeah, until I got control of it, maybe after about 5 years in banking. It was just too easy because they gave us breakfast on the trading desk, gave us lunch, gave us dinner. You just sort of lived at the bank. And when you went home, you really didn't do much except, maybe eat again or have a beer and then go to sleep and come back to work the next day. So yeah, it's a lifestyle. It's really, really not a job. And other people are asking me about the era of free money, which I've been talking about. And this is it. So roughly from 2009 up to about fourth quarter 2015, going into 2016, interest rates were effectively zero. And they were negative in inflation-adjusted terms. And then you can see they rose up a little bit before the pandemic, and then they dropped again down to zero post-pandemic. And now they're rising, and they're relatively high. Now, the point with this, guys, is that interest rates, and this is one of these regime changes I've been talking about, interest rates are mean reverting, and they're going to run back at levels we haven't seen since the 90s to about 2000. So in other words, sound money is returning. And that's going to change the market dynamics in a major way. It just is. And for instance, things like this, like, trading, well, it's going to become a lot more stressful because for a long time in the era of free money, anyone could trade and make money. And yeah, even the real traders look like the demo trader in this picture. We were laughing about it. No. If you go back to those eras where companies had to earn their cost of capital, and stocks were a lot more risky and a lot more volatile than they are now. Although they're changing, you can see the volatility creeping back in. So yeah, we're going to be seeing changes overall. And no, it's not going to be possible just to buy any stock and have it go up. You're going to have to actually know what you're talking about. And this follows up on what we talked about last night, some research that I believe it was Fidelity put out, looking at the risk-return profile of Bitcoin and other assets. And this is wild. This is off Plan B, that guy I've got an awful lot of time for. Solid guy. And the points that you should be paying attention to are the Bitcoin points, the orange circles with the line through it. You can see upper right-hand corner, and the line down to the lower left-hand corner. Yeah, horizontally we're looking at risk, vertically we're looking at return. And the interesting one is a portfolio from 2012 to 2023, a portfolio of 10% Bitcoin and 90% cash had better risk-return characteristics than a whole bunch of other assets. And then if you want to go to the other extreme, 100% Bitcoin, the risk is much, much higher, but the reward is much, much higher. That sort of makes sense. And speaking of the halving, somebody put this one in the channel. Really fascinating, because here are the prices at each of the halvings that we've seen so far. And I've been buying Bitcoin, guys, as I told you, for 10 years. Yeah, no, I don't buy a whole Bitcoin every week. I never did. I put a set amount of money in and that's it. But yeah, I remember these price points. I remember when. I really wish they'd be back again, sort of, maybe. I don't know if we'll ever see them again, in all honesty. So here we are with the next halving coming up. And the prior halving, the low was 85.68 when that took place. It's entirely possible that we're going to see a huge melt up once certain factors take place, but certain factors occur. But I don't really care. I just buy Bitcoin, put it on my hardware wallets, put them in the safe deposit box. Once one gets full, put it in the safe deposit box. Another safe deposit box gets the seed phrase. And that's it. And then I open up another hardware wallet that I bought directly from the manufacturer, and I do it again. I can't tell you how many hardware wallets I've got. Enough, right? So that's it. All right, guys, thanks very much for your time. It's been a wonderful time chatting with you. You're going to have an excellent week, and just like I promised you last week, you're going to make buckets of money this week. Just get in those markets, deploy some capital, buy some dividend-paying stocks, and buy yourself some Bitcoin. Take care.